know that our members are keeping time. Thank you all, ladies and gentlemen, for joining us for our NMC's annual general meeting. We are about to kick off, and before we start, I just want to welcome and invite our chairperson, Ms. Aune Nbula, to the podium.
Thank you, Ben. Good afternoon, everyone, and welcome. Welcome to our annual general meeting of 2026. We are happy to have you all here, and thank you for coming. It is my great pleasure to welcome you once again, and thank you for taking the time to join us today. Your presence really reflects your continued commitment to the governance and also sustainability of our fund and the future of NMC. As you may be well aware of, the AGM is really one of the most important opportunities for us to engage as the fund and openly also with our members as we reflect on the past year and also look ahead to the opportunities and the challenges that lie ahead of us or before us. The healthcare environment continues to evolve rapidly. The rising healthcare costs, changing member expectations, and an increasingly robust regulatory landscape require us to remain responsive, responsible, and forward-looking. The board remained steadfast in its commitment to sound governance, prudent financial management, and ensuring that every decision that we make is in the best interest of our members. So today's meeting is not only about reviewing our financial performance and statutory matters, but it is also an opportunity to reaffirm our shared purpose to ensure that NMC remains a trusted, sustainable, and member-focused medical aid that continues to provide quality health care protection for current and future generations. I would therefore like to thank all our together. And with those remarks, I hereby declare the 2026 AGM of NMC officially open. But I also ask Ben to just confirm the constitution of the meeting in terms of the quorum and proxies. Thank you.
Thank you, Madam Chair. Ladies and gentlemen, now I can introduce myself. My name is Ben Nandago. And just before I do the task that I've been instructed to do, just want to acknowledge the presence of our trustees. We have Kauli Mishitende in the audience as one of our trustees, Johanna Siambula as one of our trustees who are also present here with us today, this morning. I would like to acknowledge the presence of Namfisa, our regulator. I see Rachel and Operi, welcome. I'd like to also acknowledge the presence of our investment managers. Mr. Ben, welcome. And then I would also like to acknowledge the presence of our investment consultant, our actuaries, our CEO, the administrator CEO, Mr. Florian Amalungu, welcome. And most importantly then, I'd like to also acknowledge you, the members, our bosses. Welcome. Let me now get to the task. So, in terms of our, I just needed the team to support me at the back there. In terms of our notices to our members, we started our notices on the 19th of March already. Notice for AGM. We send them out via social media, our website, as well as print media, the Republican, Sun, Algemeine Zeitung, and then the Namibian. So starting in March already through to April, May, June, that's when we've been informing members of the upcoming or the AGM that we are holding today. So in terms of the quorum, we are required to have 200 main members present before we can proceed with the meeting. I can confirm that we have 12 appointed proxies representing 763 main members. We have members physically present. At the time when I got my script, we were at 33 members physically present. And then at the time when I got the script, we were 3 proxy holders online, representing 46 main members. And on that basis, I'd like to confirm that the annual general meeting is duly constituted, and we may now proceed with the matters on the agenda. Thank you.
I think, sir, you need to put on your charger, your laptop battery is really flash.
Oh, thank you so much. Thank you so much for that. We'll do that. Okay. Thank you, Madam Chair. Over to you.
Thank you, Ben. We now move to approval of the minutes. If we can quickly look at the minutes of the previous 2 meetings. One was the AGM in June, and the other one followed by the minutes of the special AGM that was done in August. So let's look at the minutes are in the pack. And we start from page 4 of the pack. That's where the minutes starts. The minutes were also shared with the pack that was circulated, so I believe they have been read. But if there are any corrections, please do raise your hand or shout on page 4. Any corrections? Page 5. On page 6. Page 7. Page 8. Page 9. And page 10. May I ask for the approval of the minutes? Any proposal for the approval of the minutes? Thank you. Any secondment? Thank you very much. Can we now move to the minutes of the special AGM that was held on the 15th of August? We start on page 11. page 12. May I ask for the approval of the minutes of the special AGM? Anyone to propose for the approval? Thank you very much. Any secondment? Thank you very much. All right, we can move on. We now move to the chairperson's report, and I will take you through briefly. It is also in the pack, but I'll just briefly highlight a few things. I bit noise. I don't know if it's me or the system. Yeah, so our fund remains financially sound, ending the year with a statutory reserves of 41.8%, which is really well above the regulatory minimum and also our own strategic solvency target that we have set for ourselves. Our net revenue has increased to 2.2 billion when we compare it to the 2024 financial year. And we generated a regulatory surplus of approximately 190 million. In addition to that, our investment portfolio delivered a healthy return of 13%. And these results demonstrate prudent financial management and also provide a strong foundation for the future. Dear members, we also experience an encouraging membership growth with principal members that have increased during the year to more than 36,000, while the total beneficiaries reached over 77,000. This represents a growth of approximately 4% during the 2025 financial year, and it exceeded our budgeted target, which also then reinforces NMC's position as a leading medical aid fund with a market share of 36% in the medical aid fraternity. Beyond our financial performance, we continued to improve the way we serve our members. A greater use of digital platforms, including online claim submissions and highly efficient digital claims processing, has enhanced convenience, strengthened operational efficiency, and also improved our ability to manage costs via and the ongoing risks of fraud, waste, and abuse that has been a challenge in the industry, as well as for NMC. While the fund remains financially strong, these pressures require careful management to ensure long-term sustainability. So for this reason, the board's focus has evolved from recovery to optimization and sustainability. Our strategic priorities include strengthening provider accountability, enhancing clinical governance, improving the sustainability of our benefit options, promoting preventative health care and healthier member behavior, expanding our digital capabilities, and also ensuring full compliance with the evolving regulatory environment. A significant milestone this year has been the implementation of the Financial Institutions and Markets Act, FIMA, together with the new fund, NAMFISA Medical Aid Fund Standards. So with that, the board has already embarked on a comprehensive FIMA readiness program. This includes a full review of our fund's rules, strengthening governance arrangements, reviewing outsourcing agreements, aligning with new financial soundness requirements as it is stipulated in the FIMA and the standards, and preparing the necessary submissions to NAMFISA by the timelines that have been set by the regulator. So with the support of our legal and actuarial advisors, we are ensuring that NMC is not only compliant, but also well positioned for continued resilience under the new regulatory framework. This is far more than a compliance exercise for us, as we see it as an opportunity to modernize our governance, strengthen our operations, and better position the fund for the future. As we look ahead, our objective is clear: to transform today's financial strength into lasting sustainability while continuing to deliver quality, affordable healthcare to our members. So as I conclude, ladies and gentlemen, I would really like to express my sincere appreciation to all the NMC members for your continued trust and confidence in the fund that is NMC. I also extend my gratitude to my fellow trustees, our acting principal officer and staff members of NMC, our administrator, all the service providers, the regulator, and all our stakeholders for your dedication, professionalism, and the partnership that we have had throughout the year, and we continue to build on that partnership as well. So together we remain committed to ensuring that NMC continues to be a trusted, resilient, and sustainable medical aid fund that serves the healthcare needs of our members and the Namibian population for many years to come. And I thank you.
Thank you, Madam Chair. I would now like to call to the stage Florian Mulungu, CEO of Met Health Administrator, for his administrator's report.
Thank you, Ben. Good afternoon, members. It's quite cloudy today, a cloudy Friday. Look like it may be a chilly weekend. Please take care. My name is Florian Mulungu, and I'm here on behalf of Met Health, the administrators of the fund. The year 2025 witnessed the continued growth of the Namibian medical aid industry. Improvements were more reflected in the overall increase of total membership and growth of contributions received for the year. In addition to the four, we are proud that NMC took the lead in this industry growth. Also, NMC successfully navigated 2025 through a challenging operating environment, characterized by geopolitical risks, rising fund costs, increased claims expenditure, and an evolving legislative environment. Despite all these challenges, as well as others, our key operational pillars remain digital innovation, sound governance, regulatory readiness, and the well-being of our members. We really would like to take this moment to extend our sincere gratitude to the NMC board and management, the members, the regulators, and all key stakeholders in offering your consistent support with the sole purpose of delivering excellent services to the members of the fund during the concluded financial year. In conclusion, I acknowledge the contribution of the Met Health executive and management teams and all the staff for their hard work and efforts, which contributed to seeing the fund winning the PMR Diamond Arrow Award, which recognizes NMC as the best medical aid fund in Namibia for the year 2025. Once more, congratulations to NMC and members. Well done. Met Health remains steadfast in its commitment to saving the fund into the foreseeable future and to providing quality medical aid administration services in accordance with our strategy and our mission. And I thank you. Thank you.
Thank you, Mr. Amulungu. Before I call on the next presenter or the next speaker, please allow me to track back to acknowledging more of our service providers. I omitted to also acknowledge EY, our auditors, Danica and team. We also have Deloitte also with us here today. Welcome, Vino. Welcome, Nicolene. Sorry, I was speaking to Melanie the whole time, so forgive me for that. And then also like to acknowledge I3 actuaries, our actuaries, Muneni, Bongwe. Welcome. And that brings me to the next speaker, Muneni. Please come take up your place at the podium as you present the executive review by the actuary.
Well, thank you, Ben. Good morning, dear NMC members. Good morning, trustees, other service providers. Thank you very much. My name is Mungay from I3 Actuaries. I will be taking you through the actuarial review of the fund, especially looking into the year 2025 and just an outlook of the year that we are in, the 2026 and beyond. Just waiting for the technical team to assist me with the presentation, and then they can kick off from there. Perfect, thank you. Let's see. All right. Yeah, so I'll just take you through the introduction, the financial performance, which is also earlier highlighted by the earlier speakers as well, the membership, benefit contributions, and the outlook of the fund as we are year to date. So just before I get into the details, I think this slide is mainly just to give an idea of the operation of the medical aid fund, how our medical aid fund operates, and how the rest of the other factors fit into the picture. So as members of the medical aid funds, as members of NMC, we do contribute to the fund. And our contribution is what the fund's expenses. Our main expenses is our claims, and we also have to fund for the non-healthcare expenses, which is our administrators, our actuarial fees, and all the other service providers' fee, and any other related expenses. But the portion of your contributions is mainly allocated for your claims. So whatever then is contributed, if there is a surplus, the surplus is then allocated to your reserves. And if it is a deficit, then the reserve is then being used to fund the deficit that is remaining when the contributions are actually not sufficient to cover that. And then we also have another key component, which is the interest income. The funds are invested. The fund need to actually make sure that the funds are invested in a vehicle that allows for it to earn such an interest, yet also making it accessible to the fund to be usable at the time when it is ready. And I think Kobus will get into the details of how the investment have performed in his presentation. So now some of the key performance measures that we look at from the actuarial point of view when we are looking at the sustainability of the fund and the ongoing benefit design and contribution. We are tagging the claims ratio. How was the claims of the year compared to the contributions that comes in, because that is the key funds that you need to fund your expenses. The reserving level is also critically important so that you'll be able to fund the years that your contributions are not sufficient to cover your expenses. And it is important also in other years to continue reserving to the fund so that you will have sufficient reserves that will cover the expenses in other years when the claims are very high. The aging profile of the fund is also an important factor. The older your profile is, because it is a risk pooling, we're actually pooling as a risk pool. The older your members are, the higher their health risk and the higher the claims of the funds is. So you would want to create a fund with a combined risk pool where you have your younger members, your older members, so that the younger members will subsidize the older members, and as they continue aging, the newer members with the lower profile are also coming into the fund. Membership growth, which is also quite a commendable one from the area presentation, that we have experienced good membership growth. That is what we want to see in the fund. You would want to see better growth and a good mix of risk profile, so you have more of your mixture of your members in your portfolio to actually cross-subsidize each other as time goes on. You wouldn't want a smaller portfolio where if all the members are sick at the same time, then they're actually using up all the contributions at once. You would want a very good, stable fund that some members, or not all the members, are claiming at the same time. There's also tariff increase, which is the NAMAF tariff increase, the increase in medical expenses year on year, that needs to be taken into account, because the NAMAF, the body that regulates the increase, needs to pass what should be the increase that the service providers for healthcare should increase their cost with. And that need to be then factored into our contributions that we're contributing to the fund to be able to keep up with the funds. The utilization, how often do we use our benefits, also makes up the increase into our expenses, which is now one of the key performance measures that we will be looking at or tagging on an annual basis. Now that will then take us to the balancing act of how do we then balance our contributions and benefits in order to remain sustainable, by taking into account all the other earlier factors that I've highlighted. Now, getting to the normal financial performance of the fund over there, starting off looking at where we were in 2023, we had a deficit, the operating deficit of about 67 million, and that implies that whatever contribution that we have, less the claims that needed to be paid and the fund expenses, we still needed a 67 million to be able to actually cover the cost for the full year. And that is now where your reserves comes in handy, and meaning that that whole amount was then covered by your reserves. And then we have your investment income that was earned, which also then assisted at least the fact that the contributions was not sufficient, but at least the investment income will then come in to offset some of the deficit that was earlier incurred for the year. We have seen a good development over the years, at least with the improvement in our results in the solvency position. I should highlight that 2023 we were actually at the solvency level of about 24%. that was below the NAMFISA required minimum level of 25%. The regulator requires that at least a fund need to keep a minimum of 25%. So that was lower. And the fund at least need to act and need to ensure that through the benefit management, one need to then revive the fund back to its stable position. And that is how we get to the 34% solvency by 2024, which is also improved to 41% in 2025. But I think one area that I could highlight, switching is a pointer. Oops. Just looking for the pointer. Okay. I think it's also important to highlight the reduction in operating results from 2024 to 2025. This 2024 was more of a real benefit management year, where you're looking at ensuring that you're reviving your reserve. But the fund also acted, and as soon as the fund was revived, you can actually see the variance there, that in 2025, the focus was to ensure that we maintain the good reserve, but we also improve the benefits while increasing the contributions at a lower rate, so that we don't have to necessarily have a higher surplus remaining for the allocation to the reserve. So at least the fund now is a position where it can grant lower contribution increases on the year, just to make sure that the fund remains sustainable. But it's not an intention that it keep a higher surplus on a year on year. It's more of creating the balance between the contributions and the benefits. So this is mostly just a comparison of NMC performance as in the previous slides, more to the industry. The dotted lines is the industry performance, and the solid line is our NMC. The blue line being the solvency level. The fund solvency levels have always been slightly below the industry, but within its target. It's the fund's personal target to keep a solvency level of about 30%. For most of the years, the solvency have been over the 30%, except obviously for the challenging years of 2022 and 2023, where the solvency level was beyond that, even going beyond the NAMFISA minimum requirement. For the expense ratio, the fund keeps the expenses ratio much lower. Your expenses ratio is now the expenses of the fund, which is now not the claims, the non-healthcare expenditures of the fund, as a percentage of your contributions. And that have been below 10%. That means that a good portion of your fund is actually being spent on healthcare expenditures. So the non-healthcare expenditure takes up about 8%. It have actually even slightly been reducing during some years, and it have remained below the industry's average. So that is actually a good performance to keep track of. Okay, just quickly getting to the membership. I think that's the chairperson and the administrators have already highlighted the positive growth into that membership. And that is mostly the positive movement that you would want to get for the sustainability of the fund. In terms of the contribution and benefit, as I highlighted earlier, this is one of the key designs of the fund, where you're looking at how do you actually create that balance between your benefits and your contributions, because there is actually no other funds coming from elsewhere. Whatever you're getting as contributions, that is what you need to maintain as that is what you need to fund your expenses. So what is at least commendable is the fund could accord a 2.5% contribution increase for 2025 and 4.5% for 2026, which was quite lower. And I mean, if you're looking at your increase factor, ideally when you increase your contribution on a year on year, you are increasing it in line with what is the other increase that is based on the performance of 2025. In 2025, we are looking at the increase factor. So generally the claims were expected to increase by, that would be 6.7%. It was an increase of 6.7%, but the increase that came through to the members is where the claims were about 4.8% higher than what we have budgeted. But the picture looks a little bit better. By end of May, at least the claims started gradually coming down, and it's only 2% higher than what we have anticipated. Hospital claims remains the high allocation of your expenses. For the first quarter, it actually came out much higher than what we projected it to be, and also higher than what the experience of the last year was. But this is the natural increase that we expect on a year-on-year is that we will expect the next year to actually have a higher claims experience than the previous year, but quite a bit higher for the first quarter than what we have anticipated. In terms of now the financial outlook, the first quarter led us to a solvency of about 43% compared to the budgeted picture of about 44%, and that is really because of the higher, sorry, that was, doesn't want to take me back. And that have also contributed to the high increase in claims, and that also is reflected in the contributions that we have received. It's much higher than what we have budgeted for because of the increase in membership that turns out to be higher. So overall, just looking into 2026, trying to get let it to be. So yeah, now just looking into 2026, I think the increase in membership, as I've highlighted, positive development. It's much higher than what we have expected. The solvency position at the end of the year is anticipated to go up to 42%, which the strategies of the fund is to retain the benefits, not necessarily increasing the benefits in a way that will lead to a higher increase in contributions, because the two are quite interlinked. The moment you increase your benefits significantly, you are also required to then fund for that, and that will actually lead into an increase in your contributions. So to maintain reasonable contributions for the upcoming years, one need to then ensure that you're also maintaining minimal changes to the benefits, and also looking into the other strategies of fraud, waste, and abuse to actually make sure that the fund contains its costs. It's mostly benefit management is one of the key areas that the fund is looking at. And with the developments of FEMA as well, there is also an area of regulatory changes that the fund need to allow for in terms of the expenses for the upcoming year. But all in all, in the absence of any other adverse event, we do expect the fund to remain financially sound and sustainable in the unforeseeable future. I think that is mainly it from my side. Thank you, Ben. Thank you, Chair.
You have an operating surplus in 2024 of 218 million. Could you maybe just remind us or refresh our memory as to what took place in 2024? Because if I'm comparing 2024 to 2023, and then I'm comparing to 2025,
Yep.
there is a significant jump. And
Yep.
my fear is that we're overly relying on the investment income for 2025. So my question is twofold. In 2024, what happened for us? Was there any abnormal transactions that we're not aware of or that took place? Or just to refresh our memory there. And then the second one is to say, is 2025's performance a more stable performance? Should we expect similar performance? Because if you then say that 2024 should have looked similar to 2025 if it was just a normal year, then we might not have gotten out of the deficit that we had. Just looking at the surplus, not the investment.
Sorry? Is it 20? Okay. Okay. No, thank you for the question. I wish I could project that.
Maybe just the slides that you had previously.
That slide again.
Yeah. There we go.
Yeah. So this is the slide that I've been referred to, and I think while I was in that, I was also touching a bit onto that. I think what is important to understand is that the fund on an annual basis go through the pricing and benefit review, where we're looking at the position of the fund at the time, the history of the fund, and the looking ahead in terms of where do we actually want to see the fund. Now, 2022, 2023 were very high claiming years, and that is because of the COVID experiences and all the industry that we have experienced, all the healthcare increase in costs that we have experienced. So at the time of of pricing for 2024, in 2023 when we are pricing for 2024, we actually pricing for recovery. And you would actually want, it was mostly a combination of benefit management strategies and contribution increases. 2024, the contribution increase was 9.95%. So that have now contributed to an increase in contributions for the year. So in the very same year, that was also where the funds were hard at work in terms of benefit management. Some of the benefit changes even included in reducing some of the limits and on all that. So the picture for 2024 then turns out a lot better because that is where we are pressing for recovery for the fund to come back to retain back the fund from the solvency of 21% to the solvency position that we're seeing. Now, when we're pricing now in 2024, pricing for 2025, we're pricing from a better position. And the objective at that point is now not necessarily to hold excess reserves anymore, but you're actually looking at reducing your operating surplus. And that is where the 3.25% contribution increase comes in 2025. And that is what also led to that reduction in the operating surplus. So the fund year on year, looking at the past, you're actually pricing for a certain target of a certain operating surplus, depending on your level of reserve at the time and your benefit changes and management that you're putting in place. And that is how we end up to that picture that we were at.
Happy with that. So what you're saying is that 2025 is a more stable year.
Yes.
And is probably what we're going to be seeing further looking forward.
Yes. Further looking forward, yes. The idea is actually to have an operating reserve as close to zero as possible, because you just want to ensure that in that year you are generating enough. If your reserves are already healthy, that year the target should be to generate enough contribution to cover for your expenses of the year. And whatever little surplus build up into the reserve. But if you're already sitting at the reserve level of 41%, you wouldn't actually want to have a very big operating surplus that is increasing the reserves while your members are actually suffering from your contribution increases that you're passing through.
Happy with that. Thank you.
Thank you.
Thank you. Sorry. My name is Lahia Kandungu. I'm on the NBC group although I'm now a retiree, and I'm also a new arrival on NMC platform. Not platform, but membership. I just want to point out maybe 2, 3 things. Oh, you cannot now? Sorry. Okay. I noticed that not only NMC or other, but other medical aid operating in Namibia. I noticed since 2000 and maybe from 2003, medical aid tend to, especially when it comes to specialist service provider, those guys are very, very expensive. Maybe this one also goes to NAMFISA. Consultation fee is 2,000 plus. That's not from your medical aid cover. It's straight out of your pocket, especially those who are on chronic ailments like cancer, and I'm one of them. And straight from your pocket, that's just first time consultation. Then you have a follow-up, you have to pay again 50% of the 2,000. That means you end up probably pay 5,000 just consultation. And then when it comes to now to the actual claim, the medical aid only, I don't know, they only concentrate on the regulated fee from NAMFISA. The rest is bounced back to you as a member. And for me, I found it difficult talking now because I'm in that group people. And now you ask, you put yourself on the high level of the what is it, the claim, the top. Yeah, hoping you say, I contribute more, and at least so that I don't pay too much excess, if there is an excess. Or probably I don't pay anything anymore. But it's not what is happening. For me now, I'm a retiree. I appreciate my former employer, NBC, for really keeping me, even though I retired, for keeping me in their medical aid cover, 100%. If it was not, my pension already gone. And then just imagine anyone with a situation, in the situation like me, where most of your treatment is more done by specialists. You are referred to specialists all the time. So that's now, I'm just saying, NAMFISA, I don't know the specialist fee. Are they regulated or it's just there? Nothing. They can put up whatever they want, especially the consultation fee. 2,000 plus out of your pocket. So sometimes you just say, no, doctor, don't refer me to a specialist. Just because I cannot afford it. Number two, I noticed that or maybe correct me if I'm wrong, your membership portfolio is very small. I know Namibia's population is also small, let alone the working group is very, very small who can afford medical aid. And it's also competition for you. You are not the only one service provider. And then now, I didn't see any, but I saw a suggestion that you are now thinking of really a serious market drive to see how you can get more members. I think that is the thing you need to see how you can put it on your table. I think for now that is that.
Thank you, ma'am. Ben, I believe these questions will be still answered, and there's a platform to answer to those questions, right? Okay. Yeah,
Thank you very much for that question. I'd just like to maybe just to allocate to respective respondents. Maybe with the question of the specialist, the co-payment owned or is under NAMAF, the Association of Medical Aid Funds. So the NAMAF, okay. All right, so maybe let me just hand over to Muneni to just maybe take us through the benefit design and why the co-payments to that question quickly.
Thank you, Ben. Now, from the benefit designs end, I think just to take you through the process, and especially with the review of benefits, the changes to the benefits, there's normally a number of proposals in terms of what changes can we make to benefits, and at times you'll see not all these benefit changes that you're proposing are all implemented at once or not implemented to the level. So as I mentioned earlier, it is actually quite important to create a balance. So for any benefit that is being designed or benefit that is being proposed, the allocation to each of the benefits, there is a bit of research that goes behind that, and that needs to be funded from somewhere. Now, for all the benefit changes that have been brought to the table, we do run through the assessment of what is the cost impact, how many members are actually utilizing this benefit, how far does this benefit goes beyond the current existing limit, and all the other factors are taken into account for that increase to come through. Now, the core payments will then come into two forms. It's either the benefit is not sufficient or the service provider is charging beyond the tariff that is regulated. So when the benefit is not sufficient, that is now when the fund comes in and it looking at how do we improve this benefit, and if there is room for such improvement of some of the benefit, that do take place. And some of the benefits will then go through, some of those will go through the ex gratia, where a special request is going through to the NMC board to say, this was actually, my benefit is depleted. However, my expenses are to this much, so I would request for an extra fund beyond the existing limit so that can be funded. So there is an ex gratia committee that deals with that. When it's now accessing the tariff, that is that is what becomes out of the fund's control, because the fund can only pay until the tariff. And the tariff are regulated by NAMAF. there is also research going through in the increase on tariff on an annual basis in terms of what should be an ideal increase in healthcare costs from the service provider's end. It have ever been that a number of service providers will then charge beyond what is regulated, and that is where the out-of-pocket comes through, and that is also the part now where the fund cannot really assist. That is not a claim that can go to ex gratia, that if it's beyond the regulated tariff, it then just have to be paid a co-payment out of pocket. Okay, I think that is mainly, Ben, I think I've addressed that part. On the growth of the fund, I think that is quite positive. We still see that positive growth on the fund. It's still very, very good positive growth and a very good market share that NMC have compared to other funds in the market. So I think with one of the graphs that I showed, we actually have seen quite very good growth in terms of membership of the members. I think that, yeah, this one. So there's actually a very good growth on NMC. Yeah. I think for most of the questions that are benefit related, I think there is a platform after the closing of the official meeting where most of those questions can then be asked and being addressed.
Ma'am, my question is based, or I want to second the lady from the retiree from NBC. And my question is, with NMC, the senior citizens, okay, if you become a retiree, you become a senior citizen, am I right or wrong? Yes. Now, my question that I've been asking myself is there a bracket for all the senior citizens within NMC to benefit from NMC, not to go to state hospitals when they are in need of health and so on? That's question number one. And question number two is, if there is such a bracket, can we propose, because you say that the more younger people on the fund, the more they will sustain the seniors, right? So can this not be in practice so that our seniors can pay less? Because at the end of the day, they only benefit from the pension from their pension fund that they are getting. I thank you.
Thank you for the question. The senior citizen, there is no specific different benefit plan that is specifically for senior citizens. The senior citizens will all be in the different options that are currently being offered by NMC, and you will then choose the benefit the current structure, or the current practice is already such that your pensioners, the fact that your claim ratio is higher as a pensioner, that is actually where more of the disease, that is where your utilization is high. You're actually using a whole lot more as a pensioner. So in a pensioner's risk pool, the pensioner's claim ratio is quite high. It can already, if we are to put the pensioners on their side, their contributions will not be able to sustain the risk pool of pensioners. And that is why they're pulled together with the rest of the members so that the younger members can also subsidize it. It will quite be a costly product if you will have to create a special category for the pensioners. But currently the pensioners are still within the different options, and depending on your risk pool, you will either choose a much higher option that have a much richer benefit, or you can choose the option more in line with what on your risk profile, depending on the benefit of that specific option. But it will be quite tricky to have a special plan for the pensioners, especially considering that it's already the pensioners that are actually claiming high. So yeah, thank you. I'm not too sure if I answer that well correctly. Thank you. I think
Thank you, Muneni. Are there any further questions for? Sorry? Okay, thank you very much. Thank you very much for that. Thank you, Muneni. For now, please allow me to invite to the stage Kobus Kraus, our investment consultant, for the investment report.
Thank you, Ben. Good afternoon, everybody. As they would say, all protocol observed on this Friday afternoon. The problem with my presentations these days, it's always outdated. Even if I prepared it yesterday afternoon, market events over the last couple of hours could have changed it significantly. But what I'm going to try and do for you this afternoon is, in a nutshell, we've seen the good performance the fund had for 2025 in terms of performance, investment performance. So we're going to pop the hood and just to look at what contributed to the performance. And then we're also going to, we cannot just touch on what happened in the past. We also need to look forward, and then especially the events over the last couple of months and current events. How's that impacting on the market, and then more specifically on the fund's performance? Because as we've seen from the chairperson's opening remarks, as well as from Mweni's feedback, the investment performance do form a very important part of the fund's overall financial stability. Now, the fund do not only rely on the investment returns in terms of solvency. That would be very risky. So fund's investments is part of the whole process. If we have good financial years, performances, that contribute to an overall improvement in solvency, claims, etc. And all of those factors is then brought into consideration when the trustees look at claims, investment performance, expectations, historically, COVIDs and all of those things, and try and minimize the annual premium increases. So firstly, looking back at 2025 was a fantastic year on the market, on the performances. If you just look at it, especially on the resources side, on the South African side, if you look at these 7 companies, they call them the JSE Magnificent 7. If you had $100 invested in those companies, that is your Northern Platinum, Anglo Gold, Implats, Harmony, Sibanye Stillwater's Goldfields, that $100 million would have grown to $360 over that 12-month period. In comparison, we all know about the Magnificent 7, those big 7 IT companies, Amazon, Apple, and those. If you had your same $100 invest directly benefited from this because of the huge performance or the stellar performance. And if you look at this, the SWIX index, that's just the index of all of the companies listed on the JSE, returned about 43% just for 2025. But just look at these outliers at the left, those resources company. So really just resources driven. Now you can ask, but Kobus, what resulted in resources all of a sudden then doing so well? And if you look at the prices, these resources companies, palladium, platinum, gold. Palladium, platinum being used in catalyst converters, batteries, I mean, even if you've got a hip replacement, not that I have one, But all of these, that is where your platinum, your palladium is being used. And we know about the AI drive, the huge appetite for data centers and all of those. And I will show you a slide later on just the amount of power that's required by these data centers. So that all pushed up the prices of the commodity. If you look at platinum, for instance, 127% return for the year, palladium, 77%, and then gold, 64.6% return for the year. So those are the commodities, platinum, gold, palladium, that had massive increases because of the demand. And then in terms of the gold price, we had to thank President Trump for this one, because of the uncertainty and the volatility he brought to the world when he took office now again in the White House. And countries, global countries around across the world said, but we cannot just be exposed to the US dollar in terms of our reserves, because we don't know when he's going to wake up one morning and then we're all of a sudden bad. And he invades us, or he wants to invade us, or whatever. He don't like us anymore, and we're in the red carpet, etc. So companies started, or not companies, countries, starting to diversify from the US dollar and started building up gold reserves. And we've seen that even our own Bank of Namibia have also decided to start now keeping some of our reserves in gold, physical gold bullion. And I mean, this is just evident, and it's interesting that you see it, especially on the emerging market side, not so much the developed markets, because they already had significant gold holdings. But your emerging markets, our smaller, the Namibians, said, hang on, President Trump is too dangerous. Let's just cover ourselves and build up some gold reserves. And ladies and gentlemen, if you then take that, South Africa is one of the top gold producing countries in the world. And then just look at palladium and platinum. South Africa on palladium, the second largest producer after Russia. Now we all know that Russia is also in the dark box because of Ukraine. So there's sanctions. So obviously you cannot buy all of your palladium like you in the past did from Russia. So obviously South Africa would have benefited because we're the second largest producer of palladium. But just look at platinum catalyst converters, these AI batteries, all of that. South Africa, the largest producer of platinum. And that all supported this growth, the need, the rise in the commodity price, and then South Africa being the biggest producers, and us as funds and investors benefiting from the growth in those companies. Also, South African bonds, exceptional year for last year. South Africa being removed from the grey list. We've also recently been removed, Namibia, the new target in terms of inflation, the 3%, and then also some infrastructure spending, and the market all supported that positively. On the Namibian side, I've got two slides, my usual oil slide. Total Energies, the beginning of the year, they had an investor conference feedback. They spent a lot of time on Namibia, and where they've actually indicated that they've done all of their research, or all of their capital expenditure and operational expenditure projections. And this is just the Venus oil field, and they are planning to go into production 2030. The cost, the capex and opex, is approximately $20 per barrel. So that is what it's going to cost them, according to their expectations, assumptions, and analysis, to get the oil out of the well. And as I said, by 2030, and the expected source reserve is about 750 million barrels of oil. Just keep that number in mind as I go through the rest of my presentation. Keep in mind, it's only one field. Ladies and gentlemen, this is going to be the game changer. If they get into production, etc., this will be the game changer for Namibia and for the next generation. What is awaited now is government policy and government direction and government strategy. So the ball is now squarely in our court. in terms of actually getting this to fruition. And even if we don't own 1 single cent of the physical oil, just in terms of levies, taxes that can be raised, your downstreaming, it will have a massive impact, positive impact on Namibia. Namibia, I think one of our advantages, ladies and gentlemen, is that we've got a diversified economy, especially also commodity-based. We all have seen the collapse in the diamond prices because of artificial diamonds and lab-grown diamonds. But we are not as in a difficult situation, for instance, like Botswana, where they are so dependent on diamonds. When the diamond prices collapsed, they all of a sudden, the whole economy is struggling. Fortunately, we've got uranium and we've got gold. And just look at that graph. When the diamond income starts to reduce, income from gold, and then also especially from uranium, is also starting to pick up. And that is, I think, for a small country, a huge benefit that we have is a diversified commodity base and not as exposed to a single commodity. Just as a matter of a piece of absolutely useless information, but just to give you an indication of the impact of these lab-grown diamonds, and Taylor Swift, that's her name. She got engaged to the American football player, I think last year or something, or earlier the year, and he gave her a diamond engagement ring, and that diamond, true diamond, engagement ring was about $1 million that cost. The next day, a similar size, color, everything, artificial lab-grown diamond you could buy for $125. Not 125,000, 125. And it's only the experts, the ladies that would have probably seen the difference between a true diamond and a lab-grown diamond. But just to show you the impact of these lab-grown diamonds on that specific, on diamonds. If we then look at the fund's performance, this is up until December. I'll just end off with the last couple of slides, then what has happened since. Total assets, over $1 billion Namibian dollars, and then the appointed managers, M&G, Namibia Asset Managers, they're part of Coronation, Sanlam, and then we've also got Old Mutual in the portfolio. So what we try and do is, as trustees and investment committee and consultants, is to get a portfolio together, a diversified portfolio that gives you strong performance, but is key is also protection on the bottom side. So you look at a mix of assets, equities, bonds, cash, property, and then also invested by different styles of managers, and then also invested in different geographical areas. But you have events like a COVID and wars which nobody can foresee and will have an impact on the market. But as I said, that is how the fund try and mitigate the risk, is diversification. If we then look at last year, again, to re-emphasize, a fantastic year, 14.74%. The last 2 years, 2023, 24, also strong years, but then good performance, and that all contributed to the overall performance of the fund. And how quickly things changed. 28th of February, Saturday morning, we wake up, put on the TVs, and war. US, Iran, Israel, and attacks, missiles, Iran retaliating, launching attacks to US bases and other interests in the Middle East. And I think if it's one thing that this have probably taught us, is that all of us know now about the Strait of Hormuz. 27th of February, very few of us would have known about the Strait of Hormuz. But I think you can go to your children now and ask them to show you perhaps on a chart where is the Strait of Hormuz, or have they heard about the Strait of Hormuz, And they would say yes. The significance of this little seaway between Iran, Kuwait, Saudi, Qatar, Iraq, it's about 60, 70 k's in breadth with the seaway. But ladies and gentlemen, 20% of the world's oil production came out of that seaway. That's approximately 20 million barrels of oil per day. So the world consumes about 100 million barrels of oil per day. 20% all of a sudden blockage, and then we can all appreciate what would have been the impact on the price, and you saw the price escalating. You remember that previous slide I showed you about total energies, 750 million barrels, that's the total reserve. So if you just take that one Venus oil field, it will be able to produce or to provide or deliver fuel to the world for 7.5 days only. Just shows you the significance of oil in our world. And if ever you've wondered how much is a barrel of oil, we all know about a barrel of oil. How much is a barrel? It's 159 liters. That constitutes one barrel of oil. So if you've got say a smallish car, you can fill up about twice from one barrel of oil. But what is significant from this is from oil, it's petroleum impact on our pockets. And we can see in Namibia about 60% of our imports are actually refined oil is coming from the Gulf Corporation, so through that Strait of Hormuz. And ladies and gentlemen, we all saw that prices at the pump that increased quite substantially. Yes, and then we saw the currency moving as well, so you had a depreciation of the currency, oil prices moving, and all of a sudden we paid in excess of $20 for a liter of oil. Ben, and I think this is one of the slides that I borrowed from you. This is just to show you what is the actual price of oil. That's approximately $10. But what we're paying at the pumps is about 20, just over 20. This balance, that's levies, charges, taxes. And although the oil prices have come down now, ladies and gentlemen, the currency have stayed relatively stable. Don't expect huge price reductions at the pump all of a sudden. Because for the last couple of months, we had to subsidize what we were charging at the pump. The shortfall was actually subsidized from the equalization fund, from the reserves. So that hole now first needs to be filled again before we will actually see the oil price going back to what it was on the 27th of February. It will come down, yes, but not to the previous levels, definitely not immediately. And that is all to say that things stay as is at the moment. We know there's a fragile, what do you want to call it, a peace or whatever, agreements, at least they're talking, but that can change overnight. And the longer there's volatility, that will obviously have an impact on inflation. And then inflation, this is just to show you how closely correlated the price of oil and your currency is, what impact it will have on inflation. And ladies and gentlemen, we've already seen that last week the Bank of Namibia increased interest rates in the expectation that inflation will start picking up. Because of higher oil prices, we're paying more for the goods that we buy at Pick and Pay, etc. We have got less to spend. So your central banks are not going to get off guard again like they did with the Ukraine invasion, where they thought that inflation was transitory, in other words, short term. It became persistent, it blew out. So rather increasing prior to it blowing out again. And therefore we saw the 25 basis points increase last week. And in the beginning of the year, we actually were expecting 2 rate cuts during the year. That have changed. There could even be a further, I think the market is making provision for another perhaps 25 basis point increase. So as a consumer, as a Namibian consumer, we're going to be under pressure for longer. And even if there's a permanent peace today, it's not going to change overnight. It will take some time before we go back to normal. Another big driver of the markets was capital expenditure, AI expansion. If you just look at this in 2015, this is just those big tech companies. They just spent about close to $350 billion US on capital expenditure on AI. Now the big question is, and I mean these companies' prices have skyrocketed, and if you look at their P's, it's the record levels. The question is, I mean, all of us in this room probably make use of Copilot or ChatGPT, but how many pays for that? And that's the question of how are you going to monetize? How are you going to get a return on all of this capital that you now have been investing in AI? And that's the big question of the market at the moment. But massive expansion, and this is just to show you an example. This is a data center that Amazon is putting up in Indiana in the US. Now we all know that AI and ChatGPT requires a lot of power, but those machines needs to be cooled. And you need to have air cons and you need the electricity to run those air cons and cooling units. This data center per day use 3 times Namibia's electricity consumption. One data center, 3 times that we consume as a country in terms of electricity, this one data center requires. And that brings me back to that huge price increase, palladium, platinum, that is also being used in these data centers for those computers, etc. And then we saw briefly, because of this huge Magnificent 7 AI momentum, we briefly saw our first trillionaire. Markets recovered or came down, so he's no longer a trillionaire, he's now a little bit poorer. He's probably now only at 900 billion. Ladies and gentlemen, a trillion is 1 with 12 zeros. That's $1 trillion US, Mr. Musk. So in conclusion, if we look at 31st of March returns, you can see the negative returns, or total assets are 111, but if you look at the returns, we were only at 0.7% for the first quarter. March was about -3 to 4% because of all of these events in the Middle East. April again positive, May a little bit subdued, June is also a little bit, but there's still a couple of days to go. Performance under pressure. Very volatile markets, and as I said, this will all be dependent, this fragile, at least they're sitting around the table and talking to one another, but how long this will hold, what will be the outcome, the long-term outcome, this all will have an impact on the markets. Yesterday afternoon, we saw the oil price now currently trading at 72 US dollars per barrel. Remember, we were at 110, so at least the oil price came down. You saw your currency currently at 1640, so also still relatively stable. And then your gold price is probably the one that came down most, just over 4,000. But I think if you look at what gold did over the last couple of years, exceptional performances are probably just getting back to more normal levels. And then finally the oil share index about 110, also moving sideways. This is over the last 7 days. Ladies and gentlemen, that is from my side. Please don't ask me what is going to happen with markets. I wish I knew. If I knew, I would not have been here this afternoon. Thank you very much.
Question?
Good afternoon. My name is Esther Ushana. So I have 2 questions. So NMC being the leading medical aid provider in Namibia, and now we are on the portfolio. I want to ask, just for you to kindly clarify on the fund's investment mix between Namibia and offshore markets, including how the risk appetite is managed and how local investments are evaluated for the contribution to employment and economic development. My second question also, I want to find out, because I've seen how the lady that spoke prior to you, who spoke about how now the funds, or the contributions rather, are circulated in terms of now operations. But I didn't see her make any mention of the social responsibility of NMC towards Namibia. So I would also just like to hear on that, please.
I think the last question I will pass on, the social responsibility issue. I can only provide you with the information on the investments. But coming to your question, from a diversification perspective, 45% of the fund's assets invested in Namibia. That will predominantly be in Namibian government bonds because we've got a very shallow market, illiquid market, so very little primary listed stocks. And in terms of government bonds, as I said, that would be the biggest portion of the Namibian component. And then we will probably have, in this specific portfolio, is about 30% in South Africa, 30-40%, with about 20-25% offshore. But it's not a fixed number, because the appointed managers like Ben, they're continuously sitting in front of the screens and looking at what is happening in the markets, where there's opportunities, where there's portfolios need to change between the different asset classes, etc. In terms of further diversification, underlying to these assets would be your equities, shares, which is the highest volatility, highest risk, higher returns, but we do not have an overweight position in equities. But we also want to have, otherwise we would not have been able to get the 14% returns. The biggest disjustice and disservice that we could have done is to put everything in cash. Then you would have been a lot poorer today. So you have to get that mix right with growth assets, but balancing it against the risk appetite of the fund. And obviously for a fund of this size and the nature of this fund, the first thing is to protect the capital, but also to provide decent returns. So you limit your exposure to equities, and then you have on your fixed interest side, your bonds, your cash, etc. So with that components invested in Namibia, that is where the Namibian economy, buying Namibian bonds, buying the companies listed on this Namibian stock exchange, etc. is how we diversified. And then finally, just between different styles of managers. Ben and his team at M&G looks different at assets than Ainu and his team or Namibia asset managers, for that matter. So one is going to be right, one is going to be wrong. We don't know which one, but we want to have an exposure to each. I hope that answered the question on your first question. The social responsibility, I don't know who want to take this one. Perhaps before I hand over to Ben, is there any other questions on the investments?
Okay, when you were presenting on the gold and the diamonds and the uranium, came to my mind that these are minerals we have here, and people are trading gold as like a trading. What is it? Yeah, they trade with gold. And then us, I don't know, maybe you can convince the government to even have a gold reserve.
I don't need to convince them, they're already.
Yeah?
The Bank of Namibia have already decided to build up gold reserves.
Okay.
So yeah, I mean, the instruments invested in must just be legitimate,
Yeah.
must be listed, and must be tradable. So that is always the key. But yeah, on the gold reserves, our Bank of Namibia have already took that strategy decision.
Okay, thank you so much. And maybe I'll just do, mine is just, the last one is on a lighter note. When you're presenting when she was presenting the claims, they're too high, especially hospitalization. It means that it seems like members are more sick, hospitalized. How about wellness group or health awareness programs?
I think that is in place, but that's not in my wheelhouse.
Okay.
I'll again pass that to the administrators or to Ben. If there's no further questions on investments, then I thank you and enjoy the rest of the weekend. Thank you.
Thank you, Kobus. It's always interesting listening to Kobus's presentations. The trustees would agree with me that that's probably one of the items that we look most to during our board meetings. Moving on, and perhaps just to, before I move on, just to touch on the social responsibility question. The funds, the regulator has become quite strict on what the funds spend the money on, seeing that it's members' money, that the focus should be on spending money towards members' medical expenses. So because of that, you would also recall that in the past we used to be very much involved, NMC used to be very much involved when it comes to social corporate responsibilities. You'd recall the Walk for Wheels, Walk for Wishes initiatives and so forth. We had, since a couple of years ago, we've since stopped that and heed the call by the regulator to only use the members' money for towards member medical expenses. But we are involved in other ways that doesn't involve us spending members' money directly towards anything outside member medical expenses. Okay, that's, I hope, yes, sir, a follow-up?
Sorry, Ben, as a member of NMC, what was quite disappointing was when that arrangement was cancelled, where NMC was quite innovative with regards to gym membership in order to be, precautionary. So for members to go on gym and exercise, that kind of incentive, I think it was with regards on the medical aid or gym membership fees or something like that. And I think it was actually cancelled. I don't know whether it was regulatory reasons or what.
Thank you very much. Yes, that is one of the items that we were given strict orders by the regulator to park. As the reasoning again was that we must only spend money for claims, member medical aid claims. So unfortunately that was one of them. However, there are areas where we are involved in, we are partnering, not spending members' money towards it, but initiatives such as the Windhoek City Runners, where the members participate with the various runs. You may have seen them. Some members may have seen them. So those are some of the activities that we try to partner with to try and encourage our members to live a healthy lifestyle. We also have wellness lifestyle partners where we've asked our administrators to engage certain providers in that would allow members to join the various clubs where they would exercise and so forth. So there's a list that we will gladly share with our members where the members can participate. So these are your fit cities of this world, your Virgin Active, where the members get a 10% reduction, which is entirely on the side of the administrator and not directly from NMC. So those are some ways that we've tried to maintain and encourage our members to live a healthy lifestyle. We will provide, if anybody would like, we can take your details, that we share all of that information with you. Okay, thank you. And then there was a, yeah, so I think we've also answered the wellness program question. Okay, thank you. So we then move to the next item. Please allow me to introduce Johanna Iambula, who is also, she's a trustee. She's also the chairperson of our audit committee. She will then present to us the annual financials that we require approval for.
Good afternoon, members, fellow trustees. Can you hear me well? Okay, I'm mindful of time, and luckily the annual financial statements just a statutory presentation of what has already been presented, so I'm not going to take up much time. So what we are asking members to do at the end of this is to kindly approve the annual financial statements. So I am just going to briefly cover, and it has already been really covered by the speakers that has been up here already. In terms of our comprehensive statement of comprehensive income, we can see there that our insurance revenue, which is our premiums received, went up year on year by 4.5%. And as Mwaneni already said, that our expenses went up a little bit higher by 6.7% year on year, from 2.1 to 2.3 billion. And then perhaps just also to touch on the assets that Kubas has already explained, that our assets are on a healthy level. It increased from 946 million to 1.2 billion. And then our reserve levels at 41.8%. I think with that, I would just want to say that our financials has been prepared in accordance with IFRS and in compliance with the Medical Aid Fund Act. They are prepared on an ongoing basis, and they've been audited by EY, and they have issued us with an unqualified audit opinion. And with that, members, I would like to ask that we approve these financial statements. Thank you. Can I have somebody move for us to approve the financial statements? Members?
Members, are there any questions before we ask that you approve? Okay.
Sorry, just because we don't have oversight of the entire financial positions, there is a regulatory note that is required because of the change from IFRS 4 to IFRS 17. Is that note displayed in the financial statement? Happy, thank you.
Okay. Any other question? So can we move to approve the financial statements? Yes, thank you. Anybody to second? Thank you. Thank you very much. Our annual financial statement for NMC approved for 2025.
Thank you very much, Johanna. We now move to approval or the number 8, trustee remuneration. So this one is just for noting. This item is just for noting the current trustee fees were approved at 2025 AGM by members. The recommendation from the trustees is that the fees remains the same for 2026. So we're not asking for an increase approval for members. It's just for noting. And then we move over to other matters. But if the meeting would allow, and also because of time, the requirement is that we must request the members to submit any matters that they would like addressed at AGM, 14 days before the AGM. We've received 2 matters from members. The one matter is really a member who is clued up on how medical aid funds work, and you would see that the advice there is really in line with what we currently do before we decide on benefit or within the benefit design process. So the responses are also in the pack, ladies and gentlemen. We have, what we also do, we engage the members that submit the questions. We forward to them our responses. We also invite them to come into the office to expand on the discussions. So that is the case. The second matter is regarding mental health. Now everybody here would probably know that the mental health bill has been passed through Parliament, and as a result, medical aid fund benefits would have to be re-looked at to allow for what the Act now says. So on that, the medical NMC will also, through its benefit design, also look at the mental health benefits under the fund. So that is something that will go to benefit design, and communication to members, as usual, will be provided as to what benefits have been amended at the end of the year. Yes, Madam Chair, if you would allow me, there's a question from online. Okay. But so the question says, good day. I would like to ask about the matter. I have heard that soon all private medical aid will be closed, and the government is busy making health a government medical aid. And will this really happen? Is NMC, forgive me, I'm reading the text as it came through. And will this really happen? Is NMC aware of the matter? And what is the reality? Will this be possible to close all private medical aid? Question mark. Please just explain about it. Okay, so that's the member question. And it's members would probably be aware that indeed medical government is looking at, I think what they call it NHI, National Health, NHI coverage for to cover everyone, including the current uninsured members of the population. However, what we are hearing through the association NAMAF is that the idea is not to do away with private medical aid funds, but to have private medical aid exist and coexist with the new initiatives. So what we have currently, and NAMAF is representing the medical aid funds at that platform, and NAMAF is also involved with the Ministry of Health in these discussions. So we currently have assurance that it will Do we have any questions on?
Hi sir, how are you?
I'm well, thank you, ma'am.
Is it time to ask question or not yet?
Not yet. So after the after the meeting, we'll open the floor for further questions, we'll take information, and we will engage further. Unless if it's specific to the presentation, the previous presentation and the item that we discussed.
No.
Okay. Yes. All right. So, ladies and gentlemen, then please allow me to move on to the next item, which is the announcement of the election results, trustee election results by Deloitte. Please help me welcome Vino Aluendo from Deloitte to present the outcome of trustee elections.
Good afternoon, trustees and members. My name is Vino Alwendo, and I am part of the Deloitte team that assisted NMC in administrating the election. So, just a general overview of this election. This is the third year of electronic voting, and these trustee nominations were handled by NMC. This is where Deloitte created the ballot for the nominees using an independent platform called Election Buddy. The NMC then provided a list of all the main members, which then Deloitte used to create unique keys. And these unique keys allow us to make sure that there are no duplicated elections or nominations that are made on the election platform. And the election opened on Wednesday, 10th of June, and then closed on the 23rd of June. So there was a slight increase in voter count from the year of 2024, which increased by 8%. But then again, apologies on our behalf. There's an omission for the 2025 year, as the count for that was around 3,200 members, as stated in the minutes. The election statistics for this year, we have 3,970 members that successfully voted, and then we have 10,088 members who opened the ballot but did not vote. From this, we have now 72 members who unsubscribed from the emails that were sent out via notifications, and the average voting duration was 1 hour and 11 minutes. However, I must state, yes, that number is quite high, but we did have a few members that would open the ballot on the 10th, and then they would later close off towards the end of the election, hence the high number. And from this, the votes that were tallied are 7,206. And then we have voters who abstained of 286. These are the members that chose not to select any of the nominees and still submitted a ballot. And to go through the election challenges, we noticed there was a number of issues that hindered from delivering all ballots to members. The main reason being them having an invalid recipient, meaning that the emails that we received were either invalid. This could be due to to poor data quality on the members' contact details. And once this is rectified, moving forward, this could then help increase the ballots submitted in the next elections. And for the election results, we have Uncle Bud for the IT and IS specialist. And these are the count of votes for all the trustee nominees. And yes, for the actuarial specialists or quantitative finance specialist or chartered financial analyst, we have Samuel Ngulu.
The stage? Yes.
Yes.
I did not mean to hold you guys. I just have a question. How many people actually performed valid votes that counted?
How many people? That
How many
performed valid?
votes actually counted towards the trustees?
The 3,000, sorry, 3,970.
So that's a concern because of
Yes.
a member of 33,000 members, give or take, that only 3,200 are able to vote. I think from a governance perspective that NMC should really consider what we can do to mitigate that, because it means that very few members are making decisions on behalf of the fund.
Yep.
Is it-
Thank you very much, Operi. We take note of that. We will continue working on getting more and more members to vote. The challenge is, if you recall the slide that shows that 10,000 members would open but just not cast their vote. So the challenge or the mission for us and the aim for us is to try and convince these members that actually can access the platform to actually end up voting. So that is the task that we put for us going forward.
This is just a suggestion. Perhaps because we have the NMC app, why aren't these elections somewhat built into the system so that it can also increase the number?
And some of the links as well was sent via the application, yes. This happened just midway through the election. Another.
I'm just saying maybe I'll just on the number of those who just opened the email and didn't vote. Maybe it's because of the nominees, maybe unknown to them or something. I don't know. I'm just guessing also.
Yes, no, I think in the ballot there were, first of all, video links for the nominees to introduce themselves and give an overall background. But we do suspect that, yes, there could be some sort of voter education, a link basically just showing the members how to actually make sure that their vote is casted, because it could potentially be that the member did select the nominees, however, they didn't follow through to press submit. Yes, they didn't follow through to submit the ballot.
Thank you, Vaino. Again, if there are any further questions after we've closed the meeting, we will be staying behind, and we will gladly take more of your questions, and we can engage further. Please now allow me to call back to the podium our chairperson for the closing.
Thank you, everyone, and thank you for coming, for constructive discussions that we had, for the questions, the comments, the suggestions. We take note. We will deliberate on them at our discussions. As I've indicated before, our challenge has really been balancing the sustainability of the fund versus the rising healthcare costs. As you may be aware, we do not regulate or set the charges by the service providers. And those charges versus what we are able to afford as an industry, as a fund, through NAMAF guidance, is really what challenges us to balance the financial sustainability of the fund, and also to commit and make the ensuring that the claims have been paid is what keeps us awake at night. And that's what we strive on, and also try to find that balance. So with that having been said, we also try our level best to govern the fund in the most sustainable way, in the most appropriate way, with the guidance also of NAMFISA, our regulator, and the guidance of NAMAF as well. So thank you very much to all the members, my fellow trustees members, the administrators, the investment consultants, the investment managers, and all the service providers. Thank you very much for coming. And I wish you a productive session after this in terms of the questions and answers, as well as a great weekend ahead. With that, we now officially close the meeting, and Ben will guide us in terms of how we proceed with the next session. Thank you very much.
Just a quick announcement before you leave. There are refreshments at the back. Please help yourself before you leave, if you are leaving now. Otherwise, the floor is now open for those additional questions and matters that you'd like for us to discuss.
Okay, and then the last one is that I am a mother of two, and usually the kids tend to get sick, ne? At the same time. So I found myself one day going to a hospital midnight, but I was told, unfortunately, I was told there is a limit. And then both child cannot be seen at the same time, because of a daily limit that is set there. As a mother, I find this very difficult because I had to make a choice which child needs to get healthcare that moment, and then the other one needs to come back. Why is there a limit?
The outpatient services from the hospital is payable from the GPs and specialists day to day. The reason why the fund did that is to protect the fund from the unnecessary claims or services provided for in the outpatient facility in the hospital. For example, a member, instead of going to the GP, I don't have a GP specialist, I'd rather go to the outpatient. So it's just to protect. However, after hours and emergency, it is still paid from the hospitalization benefit. Having said that, the hospitals are aware that if it's an emergency, especially for the children, they can just contact us the following working day, and then we will provide pre-authorization for that specific incident so that it can be paid from overall instead of from the day-to-day.
So if it happened the next time, I must just tell them they must ask for pre-authorization the next day?
Yes, the following working day.
Okay.
That's why there is pre-authorization, so that to make sure that that service is 100% valid emergency, and not because I do not want to see a GP during the day. Understand that?
Yes, I do.
Okay.
All right. Thank you.
Thank you, Beth. More questions? Okay. With that, please enjoy the refreshments.